we're famously bears on copper in the market. In actual fact, bulls and bears have been completely wrong for 3 or 4 years, since lockdown actually, because the price has basically traded sideways. It's actually been trading at about $9,000 plus or minus 10% for the last 3 or 4 years, even though we've been bearish. And completely wrong, not surprising for a sell-side analyst. And the only thing that makes me sleep at night is the bulls are wrong too.
I am very happy to have Tom Price in the building.
Thank you.
So just to give you a bit of background, Tom and I worked together at Macquarie. He was the big boss, the head of commodities research.
Yeah.
And if you're head of commodities research at Macquarie, then
you're on a plane all the time, just talking to strangers. Yeah.
Give us a little bit of an introduction to how you ended up in that position to start with. And
just a series of bad decisions, thanks, Richard. So, but yeah, no, it's just the last bank I worked at, currently at Panmure Liberum, doing more or less the same thing, just powerful, deep, insightful commodity research.
Brilliant.
Yeah.
And then did you come from a mining background? Were you down there underground?
No, I did some underground time. I used to be a geologist, but my specialty was exploration geology. So I used to go out there and look for stuff. Yeah.
Right. And then that was back over in Oz?
Yeah, mainly in Australia, but spent some time in dodgy places like Central Asia, Russia, just looking for stuff there too. Yeah. I know, it's pretty exciting. Yeah.
Now, what excites you about the sector?
Well, it's you have to be good at macro and thinking big, because the sector I looked at, global commodities, so base metals, precious metals, bulks and stuff, they just get tortured and tossed around by a casual throwaway statement by, I don't know, a US president. And so it really keeps you on your toes. You've got to be on it all the time.
And what's the key to understanding commodities as a whole, would you say?
I generally tell people you've got to know who the big buyers of a commodity are, or is in China's case, and who the big producers are. And every market, even though broadly they sit in the commodity space, they're all structured differently. And so you've got to understand what those structures are. Does it favour the producers? Does it favour the buyers of those commodities? And try to figure out which element of each market dominates price action. Right.
So demand supply, really working out where the imbalances are, oversupply. What would you put them into buckets at the moment, do you think? Or?
Well, there is some market. The bucket I would toss some of those markets into, if we're talking buckets here, is which commodities does China desperately need to keep the economy functioning?
Still that's what we were playing in 2007.
Well, it still matters. They consume 40 to 70% of all commodities supply, but there's some commodities they have no choice but to go overseas for. So, world's biggest aluminium producer, but they actually need to import most of their bauxite. Copper, 70 to 80% of their copper units are imported, and iron ore heavily dependent on imports, and particularly from beautiful country that I call Australia, Richard. So they're the three commodities.
You'd be in a bit of a mess without China buying your iron ore, wouldn't you?
We'd still be playing cricket and doing barbecues. It's not a big deal. And maybe playing rugby, for example, stuff like that.
Yeah. Now, which one would you like to go into first? If we're going to talk about copper, iron ore,
go for it.
If we start with a couple of commodities you think are particularly interesting at the moment.
Well, I mentioned bauxite, copper and iron ore. Really, copper and iron ore dominate they're the dominant drivers of equities that most people are invested in. So think of big stocks like Rio, BHP, Anglo's, Glencore, Vale, all of those including Vale, have iron ore and copper exposure. So most of the time I spend with clients, I'm always talking about those two markets.
Okay.
And so I think, that's probably where you need to focus on.
So that's us showing high grade copper. Would you rather I get LME up, or is that a...
I've never... high grade copper will do. The price action will be exactly the same. And crikey, that is going vertical. I wonder what's driving that one, Richard.
Yeah.
Probably a US price.
Almost as if somebody's interfering in the global dynamics.
That's a good word, interfering. So It's amazing what a 50% tariff will do to a trade. And over the last 12 months, and it's not just the last few weeks since the US president decided to load up 50% tariffs, this market's been pricing a 50% tariff or something big for months. And we've actually seen a big transfer of copper into the US to try to close that arbitrage. And it hasn't really closed yet.
What kind of percentage, when people talk about, right, you need a lot of copper for electric vehicles, for AI data centers, if I'm building a data center, is it a tiny cost so I don't really care?
That's the fact that you've asked the question that way tells me that's exactly right. Yeah, I mean, if you're building a giant building, some of the cost elements that make up that thing are trivial compared to the cost of the construction work. So a data center builder will be not entirely indifferent to copper, but it won't be a big factor.
Right.
Land access, government support and subsidies for the program of building it, so on, they're far more important. They'd probably spend more time on that. And also, can they control those cost elements? Probably not. And also the time frame, they probably build over 3 to 5 years, so they're not really concerned about what the copper price is doing right now.
Yeah. What's the smart trade then on copper at the moment?
Well, we're famously bears on copper in the market. Not many people can get away with doing meetings with clients with that view, but they are intrigued to see us. It's like catching up with a nut job in the street who's thinking about a downside risk to this market. In actual fact, bulls and bears have been completely wrong for 3 or 4 years, since lockdown actually, because the price has basically traded sideways.
That's it, yeah. Goldman this is the time, 2022, you got to buy copper now. You know, it's going to the moon. Yeah,
Goldman's some really powerful research there, mainly pushed by their desk. But they were talking about a super cycle thesis, which we thought was hilarious because it wasn't a super cycle. It was just a good old-fashioned inflation trade after lockdown. But it's actually been trading at about $9,000 plus or minus 10% for the last 3 or 4 years, even though we've been bearish. And completely wrong, not surprising for a sell-side analyst. And the only thing that makes me sleep at night is the bulls are wrong too, because of that sideways trade. And it's possible it may carry on doing that. And that's one of the extraordinary things about the copper trade. There is a stunning amount of generalist capital that's been parked in the copper space. And so it tends to respond mainly to macro themes.
And then what about the mining stocks of the copper producers? Obviously, Anglo's, BHP tried to come and grab it.
Yep. So that was an interesting effort. 3 bids turned down. So, and then Anglo's has proceeded to dismantle itself. And what it's trying to do is get rid of all of what it regards as non-core assets, perhaps. So coal, it's just spun off the Anglo Platts division into Volterra. It's now considering De Beers. What's it trying to do? It's trying to be a copper-rich equity, which is regarded as very appealing to investors at the moment because it's a green input for greening the planet. So,
and are there copper assets really impressive, or there's big growth potential? Or
it's got growth and it's got high-quality assets, but the superstar asset in the Anglo's stable is Quellaveco. So it's a huge South American operation. When we're looking at probably a 4 to 6 sort of level mine on planet Earth, and that's a company driver if they can, carry on developing that thing. So big copper assets takes staggering amounts of money, long lead times to get into the market, and they're doing a pretty good job.
Yeah. So. And now that they've cleaned everything up, if De Beers, they also managed to divest that. Is it just a bite-sized chunk for a BHP or Glencore or?
Yeah, so it's only one company can clean up Anglo's, and that's probably Anglo's. And I've got to say they're doing a really good job. So, but eventually they're going to create an entity that will be enormously appealing for a major to engage. So, and the ones that investors keep sort of flagging to us. Is BHP, obviously, because they've already had a go at it.
Yeah.
Glencore, although it's just spent $7 billion on coal assets out of tech, so maybe it'll struggle.
But that was a reversal, wasn't it?
Yeah, that's right. Yeah. We hate coal. Actually, we love coal. Everyone.
Take my money.
Turns out we like cash. And poor Glencore is struggling with, very weak coal prices on met and thermal. It's the biggest exporter of both. So it's going to struggle, I think, for a bit longer. But Rio, Freeport, all of these are candidates for taking out a copper-rich sort of company like Anglo. So it'll be interesting to see that play out if it happens.
Yeah. Let's move on to iron ore then.
Okay, iron ore. We can talk about gold too, see where Greatland's going to go. Iron ore. So what month is it? July. I start getting bearish about now. So I'm a seasonal junkie, as they say. I think about seasonal drivers for this trade because the iron ore steel supply chain centered on China is profoundly seasonal. So what it does is China goes crazy bringing in raw materials for their steel industry, including iron ore, after Chinese New Year through to the centre of the year. And then about July, August, they start rationalising their production rate, start thinking about maintenance programs as they enter the winter period. And usually the turning point's about September, October. But this year we've got an exciting new bear theme to talk about, and that is China's government is actually considering capping production because they see a surplus in their local market, and so that of steel. Yeah. So China imports, as I said, 80% of their iron ore units, and so that's going to sort of retard the seaborne prices perhaps by fourth quarter.
Right. So this leads into our beautiful drawing there that you've sketched so well. We're going to hold that up. Yeah, brilliant. Yeah. There we go. So China's seasonality and... They come out of winter and Chinese New Year, and that period's a great transition for anyone who's invested in Rio, BHP, FMG, Vale. Anglo's also has the Minas Rio assets in Brazil. And this is what I call the blue water period, very quiet period between May and October. So we're in the middle of that. And then we go for the downswing. Now, China's government is acutely aware of this dynamic, mainly because they get our research. But I've spent a lot of time with Chinese mills and they talk about this. And this is a period where generally they try to clean up their capacity and tighten up their supply chains, and they basically draw down inventories. And that has a big negative impact on the iron ore trade. And generally, the best time to trade this is to basically buy iron ore exposure around November or when Panmure Liberum research comes out and tells you to, and then sell around here. So that's the trade there. Buy here, sell there. And we're right at the peak just now.
Yeah, we're in this period here, so downswing. And production caps will have a big impact. This industry is super lean and highly responsive to government policy. So when they're told to act, they do act. And that's something worth tracking. So the big iron ore producers are aware of this too. So they get our research as well.
In terms of iron ore, Rio's is obviously the king.
It is. It's the superstar producer.
Oh, sorry. And we've got the chart here, and you can see the cyclicality.
Yes, make up your own word. That's fine. Call it cycles. Save yourself.
There's certainly cycles there, isn't there?
Yeah, the transition to prices is not clean. It's quite messy. And the reason for that is the mills have amazing capability of switching between their different iron ore options. So they don't just get fines, they get lump and pellet. Yeah. And they also pick up scrap, and that tends to neutralise the price response to the seasonal flows underneath. But every now and then they just can't help themselves, particularly if there's stimulus or some sort of positive outlook that is exogenous to China, and they will buy aggressively, and that will report through the price. But that's not that sort of year. They're very subdued, they're trying to manage their costs, and they're a bit nervous about this production cap that the government keeps talking about.
Okay. So, sorry, to go on to the stocks, that puts a bit of pressure on Rio's, doesn't it?
Yeah, it does. So, and BHP and FMG in Australia, they're the main sources of iron ore for China. So, so China gets most of their ore from Australia and the extra bit from Vale, and they get nervous about this time of year. So, so this is, it was interesting. Their last quarterly update a couple of weeks ago. They did express surprise at how well China's economy's held up. They sort of praised China's ability to switch into the export trade because their domestic market wasn't strong, and to be able to manage the tariff war with the US. But they weren't bullish. I think they're expecting some more pressure to come on their trade, so they're a bit worried about that.
We've got a beautiful chart of Rio's there. down this morning because they reported soft numbers.
Yes.
Let's say, but I guess, our traders are particularly, they love trading Rios normally as a buy around these levels because it runs through that kind of support levels normally in those mid 40s.
Yeah, so I'm talking about fundamental drivers for iron ore and rather than the equities. But the equities have been under a huge amount of pressure all year because they're getting hit by the tariff theme. So investors are going, yeah, thanks for the seasonal charts, Tom. Love the drawing, but I'm really worried that China's steel-bearing stuff to the world is just going to get taken out by this tariff conflict. So I'm just going to take some money out of the big equities and just wait. And so we've seen all of them come under a lot of pressure during the course of the year. So now we're starting to see some of the metrics get to some interesting levels, and we're getting calls from value investors that are saying, "Is this a good time to sort of get involved?" And I said, "Okay, well, maybe just wait a couple of more months." So a better entry point's the end of the year, we think.
Yeah.
So.
Incredible. Right, so that's BHP, Rios. We've looked at Anglos. Antos, I guess we can't be bullish if we're bearish on copper.
Yeah, the most popular pure play equity with pure copper exposure. So Antos and Freeport. Freeport's just big, slow moving, and Antos is a bit more interesting. All their assets are most of their assets in Chile, and it's the exciting way to play the copper space. And they've been mining copper for decades. They are technically very competent, and they're very good at messaging the market. So it's if you want a nice, clean way to get exposure, that's the popular one to go for.
And have they still got the big family owners?
Yes. So it's still a big, chunky family ownership that dates back 100 years. Started off in rail, ended up in copper, and they're not going anywhere fast. Yeah. So they're quite happy where they are, and I think we've got a hold on them at the moment, the stock, but yeah, it's hard to switch to a buy given that we're bears on copper, so we'll probably just hold that position for a bit longer.
Any stocks that you're particularly interested in at the moment or think are worth a look?
Well, I tend to look at the big stocks we've just been talking about because I'm a macro guy, and decisions by the big mining companies obviously are very important to the main commodity flows. So but they're the ones that we sort of focus on at the moment.
Let's have a look at the commodities then, and so we've got platinum on the system. That's suddenly out of nowhere found some life.
Absolutely. So I've just been marketing in South Africa. So and we're bulls on PGMs. So we like platinum, palladium, rhodium. And we're also very confused bulls at the moment because the calls work, but for reasons we can't quite understand. So we would agree with you. It all started to happen on Platinum Week in London, middle of May. Mm-hmm. So we were hanging out with PGM gurus, WPIC, the Oxford crowd, and also the Anglo Platts mob, having lunch with them, drinking, laughing, saying, yeah, the price is going to lift. The price is lifting, and over the next few days, it started to lurch higher for no obvious reason. Looked through our network of contacts, didn't find anyone who was sort of restocking because that was the famous driver everyone was holding out for.
Right.
And in the last couple of months, it's bolted on 30 to 50% to very subdued price action that lasted for years on nothing in particular still. Yeah. And so we're still trying to come to terms with that.
I think it was because I sold my palladium.
Is really
that was the final. It's a resistance.
Inventory poor market. So thanks for releasing that stuff. So what are you doing with the garage space now?
It's
the catalyst, I think, was the Volterra spin-off. I'm convinced of that.
Didn't it? Yeah.
Because in the days after the spin-off, we were getting lots of incoming queries on the state of the PGM market, what PGM stood for. So obviously we're dealing with generalists when they're asking that question. What's PMG, Tom? No, it's PGM. And then you give...
What's Procter & Gamble got to do with it?
So there was a lot of 101 sort of chats for a few days from the US and here in the UK, because the listing was on the LSE. So lots of intrigue. And I think people have basically positioned in an illiquid market, and that it wouldn't have taken much to actually make the prices pop, I think.
Right.
So.
And yeah, as you say, they'd been depressed for so long, or capped. Yeah, I guess.
Yeah, thoroughly capped. And but the fundamentals of this trade are extraordinarily tight. No one invests in new supply. Most of the supply comes from essentially two deposits, Norilsk, which we're big question mark over whether we can access that supply. We're still getting Russian PGMs, but who knows what would happen in the future. And the Mariinsky Reef in South Africa, and no one's really growing supply for one reason or another.
Yeah.
And it turns out we actually need internal combustion engines with autocats for a bit longer, maybe a few more decades. And EVs aren't going to save us. And so demands hasn't really changed a great deal. So that's a winning combination for price upside.
Yeah.
But the prices haven't responded to that until May. And now we've got a very interesting market in play.
Right, so that's gold. Yeah, we mentioned we were going to have a look at gold.
Gold, yes. So extraordinary price lift over the last 12 to 18 months. It's now sitting comfortably at about 3,300 and holding. So it's actually been range trading. There we go. You can see the range there since the end of Q1. Very tight range. I think it's 3,300 plus or minus 3%. And what that's telling me is all the bull factors are thoroughly priced in and understood by the market.
Right.
What are those bull factors? Most of them are short-term drivers. So we've got a rate cut cycle theoretically still in play. We're going to find out whether it is or not this week. But the other factors include deterioration in global trade. That was actually happening since Russia invaded Ukraine. So a lot of confusion and uncertainty between major players around the world.
Yeah.
And then that's been compounded by the fact that Trump's rolling out tariffs. So there's a lot of uncertainty there, and so people buy more gold. But you've got war themes. So we keep seeing it pop up on major incursions or events. So Israel versus everyone in the Middle East. Russia versus Ukraine, China's Taiwan confrontation, Cambodia, Thailand. Oh my God, it's just lots of themes there. Buy more gold. But the one driver that I think is enduring and extremely bullish and difficult to quantify is China's willingness to keep buying metal from abroad and storing it in a back room somewhere. And I think it's quite clear to me anyway that they've got a plan to back the renminbi and perhaps offer a reserve currency to the world, and they need to back it with gold. And so that's a theme that's probably worth tracking. So the World Gold Council tracks the reserve positions of all the countries, and I think China's number 6 now with about 2,500 tonnes of gold, versus the US number 1 at 8,000. So they want to go big in gold. And so if you're a gold bug, that's a very exciting theme.
And that is, that's the longest of long-term plans, I guess, because
no one does long-term plans better than the Chinese, and that's decades long, I think. So maybe we should get comfortable with a higher gold price than what we're forecasting. So that's probably the biggest upside risk to our forecast at the moment.
Great. Smaller ones like aluminium, nickel.
So the Ali trade was knocked about last year by supply chain themes. So we had multiple refinery failures in Australia or closures. So Alcoa had some Western Australian assets. One of them was shut down for cost reasons. And Rio, in their Queensland asset refinery there, they had power issues. So we saw about a couple of % of global alumina, that's the oxide used as a feedstock for aluminium smelters, shut down. But the real driver was Guinea, sourced at 25% of the world's bauxite, the raw material that gets converted into oxide and then to aluminium. They just randomly decided to shut down exports, and that starved the market of another couple of %. So my modelling went massively into deficit, and the entire supply chain, bauxite, alumina and aluminium prices all lifted. It's all calmed down a little bit this
Yeah.
year. So we're seeing the bauxite and alumina prices stabilise, but now the aluminium price has been knocked about by these tariff themes. So, it's a very exciting time to cover that space.
Yeah.
So, but in terms of equity thoughts, Alcoa, Rio Tinto is a big producer. Rusal, if you can trade in Russian stuff, and Chalco in Asia. So they've all been beneficiaries of these various and evolving drivers for aluminium. So think of a price of about 2,500 to 2,800. That's the range the aluminium price is going to hold in.
Now, before we let you go back to the real world, if we get a scenario where there is peace, Russia and Ukraine, and gradually, backed by Trump, Russia's allowed to become part of commodity world again, what are the kind of smart things to look at? That's a good question. So the popular view is energy markets will collapse because you get this flood of coal, oil and gas. So pre-war, Russia was the source of 10 to 15% of all those three commodities. And so production would be cranked up because they're connected back into the world and we'd be overwhelmed with it. Not true. In actual fact, the supply rate of Russian coal, oil and gas to the world hasn't really changed a great deal. In fact, for coal and oil, it lifted and went into their dark fleets. Gas is probably the only one that was truly constrained because the infrastructure pipeline into Europe couldn't be switched physically anywhere else, and they couldn't really crank up their LNG capacity. So maybe we'll see a resurgence there, but the EU is quite determined to shut down pipeline forever. They're talking among themselves and they're trying to terminate it forever in 2027. So maybe the lack of Russian gas will keep gas prices across the world through the LNG trade higher for longer. So that's the one we're probably thinking will be the bull case. All the metals trades, copper, PGMs, they've constantly been delivered into, and aluminium, they've been constantly delivered into the world ever since the war started. It's never really been effectively shut down. So I don't think that's going to change much either. So the answer to your question is not a big change, perhaps a little bit of bullishness around gas.